rise to intervene in a debate which is happening around the ACT at the present time, a debate which I'm sure members of the Senate couldn't be unaware of, a debate about an issue in the ACT election. It's an issue about the extent to which, under a re-elected Labor government, there will be an increase in residential rates. Today, a former Treasurer of the ACT, Mr Ted Quinlan, had an article appear, or was behind an article that appeared in the Canberra Times, headed "Quinlan Tax Reform Won't Mean Rates Slug," in which he argued, or appeared at least to be arguing, perhaps it was the author of the report of the newspaper report itself, argued that the changes, the tax reforms proposed by the local Labor government won't translate into a tripling of the rates. Well, Mr President, I'm also a former Treasurer of the ACT, and I would like to indicate my views about the issues that have been raised by Mr Quinlan. The ACT government announced tax reform in this year's budget. It issued a fact sheet at the time of the budget, in which it announces it's going to abolish a range of 6 different taxes and duties, including conveyance duty and insurance taxes, and according to this fact sheet is going to replace that revenue through increasing general rates and adjusting utilities network facilities tax. Now, we'll put aside the utilities network facilities tax for the moment because it raises just $3 million a year, so clearly it's irrelevant for this particular exercise. General rates are obviously what is principally proposed to be increased in order to pay for the government's abolition of this range of taxes. Well, what is the value of the taxes which the ACT government is proposing to abolish? Well, in last year's budget, the 2011-12 budget, the last budget before tax reform, quote-unquote, began, conveyancing duty accounted for $294 million approximately, duties on insurance another $44 million, duties on life insurance another $2.3 million, and the payroll tax proportion that's to be abolished under the proposals put forward by the government with their tax reforms another $6.8 million, making a grand total of $347,424,000. Now, that plus the rates being collected at the moment, about $173 million a year, leads to a total of what will need to be collected from rates in the future of over $500 million per annum in 2011-12 figures, $521,148,000. What will that mean for rates in the Territory? Well, again, we have an answer to that question. The ACT government commissioned a rates review written by, at least led by, none other than Mr Quinlan, the former Treasurer of the ACT. And in that review, the table clearly indicates on page 148 that increases in household rates over a period of 10 years will provide for the replacement of the lost revenue that arises from the abolition of the said taxes. And that takes, for example, the average rates paid by a person in the first quintile, the lowest level of rates, from $1,056 to, in year 10, $2,932. As any senator can easily see, that's approximately a tripling of rates. In the fifth quintile, the highest level, it rises from $1,546 per year to $5,322 per year, again approximately a tripling, in fact more than a tripling of the rates that a person would pay, and in every category a similar outcome ensues. But the ACT government maintains that this shift into general rates won't lead to the very tripling of rates which the government's own review suggests would be the consequence of making this policy decision. Now, on the radio a week ago, the ACT Treasurer, Mr Barr, tried to explain how that could possibly be, and he made a number of postulations as to how this might occur. He said, well, it won't necessarily triple because the increase in population over the next 20 years will provide an increase in revenue and a broader base. Well, of course, that's true, but it also provides for more people living in the Territory who need services, and therefore the cost of providing those services goes up. So you don't get the benefit of an increase in the population. He did go on to say that you get better economies of scale with a larger population. Again, that's true, but not to the tune of $350 million. Patently, you couldn't get economies of scale at that level. He suggests that, also suggested in the same interview on the ABC radio, that the increase might not all be in residential rates, it could be partly in commercial rates. But bear in mind again, Mr President, that before these so-called reforms began, 83% of total rates in the Territory were levied or rose from residential rates. So if there's going to be a shift into commercial rates, there's going to be a massive increase, clearly, to make up that $500 million to achieve that level of replaced revenue. Mr Barr went on to suggest that the GST would be rising in line with population, and GST revenues for the ACT. Well, of course, that's also probably true, but again, the cost of services also rises as more people come into the Territory to make up for that increase in population. And again, you can't possibly expect an increase in the GST to the tune of $350 million. In fact, in recent years, GST revenues seem to have been falling. He said that there was a 5-year plan to explain how this revenue would be replaced. But the 5-year plan is publicly available. It doesn't explain how they replace the $350 million in lost revenue from the abolition of these taxes. He does make it clear that the ACT government will abolish stamp duty over 20 years. And as a Liberal, Mr President, I'm very happy to see taxes abolished, but not quite so happy when I see them simply moved over into other forms of taxation, and other forms of taxation going up. Real tax reform is when you take the tax burden lower, not when you simply transfer it elsewhere. And if the ACT government wants to abolish stamp duty over 20 years, that's stamp duty on conveyancing and other things, that's a huge amount of money. If it wants to abolish it over that period or some other period of time, then it has to fund the shortfall over a similar period of time. Unless, of course, you want to run up debt and deficit to bridge the gap between your decision to decrease revenue in one area and not increase it in the other area at the same time. Mr President, it boils down to this. The ACT government clearly intends to abolish a very large amount of taxation in the Territory. It equally intends to transfer that burden into rates. That's its clear published policy, but it can't explain exactly how that will occur, exactly what the extent of household rate increases will be, even though it has published a document which explains under this preferred option what that would mean for rates. And what that would mean for rates is unarguably, according to this document, a tripling of people's rates. If that's not what's intended, then the government needs to explain to the people of the ACT exactly how that's going to be achieved. The government here has studiously avoided offering any such explanation. And in these circumstances, I put to the people of the ACT that not only is the claim that the rates of the ACT will treble under a re-elected Labor government, supported by the Greens, not only will it treble, not only is that claim a sustainable claim to make, it is the only reasonable supposition to make based on the evidence available to the people of the ACT. The Labor Party could clarify this by explaining where else the $350 million will come from. It has failed to do so. It has 8 days in which to do so, and I invite it to clear this matter up. If it fails to do so, however, my party will insist on continuing to bring this matter to the attention of the ACT community, because the claim that rates will treble is absolutely sustainable and clear.